Let's start out with the very latest figures out of China. What do you think this information tells us about the overall economic momentum, and how strong has growth been really over the first 10 months of the year, especially with all the external activities going on?
Well, I think the 4.9% industrial growth just a little bit short of the average growth number we're shooting for, which is 5% this year. Nevertheless, I think the really bright spot of the numbers released by the Statistics Bureau with respect to the consumption side. We're seeing a 2.9% increase, and more importantly, the CPI number is in the positive territory, increasing by 0.2%. I think this is a very, very significant development in the sense that the CPI numbers have been, in the negative territory for a long, long time, and it's the first month that we see an upstick right now above 0%. So that means that the demand is increasing. Things are starting to be tightening up on the demands on the supply side. And I think this is a very good important thing. I mean, the anemic demand, the anemic aggregate demand in China's economy has been the biggest headache so far. And we're starting to see a little bit of a turnaround right now.
Yeah, let's talk more about this internal consumer demand, because Beijing has really been trying to find a way to unlock this for years now. And they've had a series of successful stimulus measures. Talk about that and where you think this is going. How long can they continue the stimulus measures, and at what point are consumers going to have that confidence where they feel they can buy the big ticket items, even if they have money in savings?
Yeah. Well, you're absolutely right that the Chinese government has been adopting a stimulus package, especially on subsidizing consumption for quite some time. But still, we have to take the October number with a little bit caution, because this is mostly driven, in my view, by a cumulative effect of these consumption subsidies, as well as the national holiday long weekend in October. And I hope this trend will continue. As a matter of fact, we're starting to see that these government subsidies on consumption have been gradually phased out. I mean, you can't continue to subsidizing them forever. So hopefully, in the absence of these, subsidy measures, consumption is still going to grow. 2.9% is quite a significant number in my view. So as long as for the rest 2 months in this year, consumption is on the current trend, I think we are okay. I mean, I got my personal experience start to see that indeed the shopping malls have more people, and the issue you raised about affordability, I don't think there's a problem at all. I think people do have the money in the bank. You look at the aggregate savings in the bank, and it's been very high number all along. It's a matter of whether people are willing to spend, are confident to spend. And the latest number in October seems to suggest that people are ready to spend some money, especially we are rapidly getting into the holiday season.
Yeah. AI, of course, very central to China's economy. Now, in the United States, a great deal has been made over the past couple of months. Many AI companies simply aren't making money, firstly, and now there's a lot of pushback in the financial markets as well. A lot of people investing think that they're just overvalued at this point. What is it going to mean to China's economic growth? Because it really is tied so closely to that, the technology supporting that growth. Are they having an effect on manufacturing, productivity, competitiveness, and are you worried about AI moving forward?
Well, let me point out two differences. One is that I think the Chinese government support for AI, the AI-driven strategy is just unwavering. I think there's still a lot of investment sentiment into AI technologies. The second thing is that in China, we're starting to see really these AI technologies being deployed in manufacturing sectors, as you just pointed out. It's not just something online. People go and ask some questions and get some very convenient answers. It's more than that. I think in China, manufacturing has been very quick at adopting these real technologies. I mean, many stories like that reported in the press. So I think the AI bubble, so-called AI bubble in China, I don't believe that's true. It's indeed happening. And look at the growth figures, industrial growth figures in these high-tech areas. It's been growing very fast. Just the numbers released in October, for the October. So I think this AI thing is for real, and here in China, we're going to continue to invest in this very, very heavily.
John, we don't have a lot of time, but I'm wondering what you think about China pushing ahead with the supply chain upgrades, especially in the face of the ongoing Trump tariffs. How is this structural shift going to affect China moving forward?
Well, I think the numbers are speaking for themselves. I mean, you look at exports in October, it's indeed slowing down. As a matter of fact, exports is seeing a very small decrease in October. So I think this I call it selective decoupling between China and the United States is indeed a long-term trend in my view. It's very difficult to reverse, given the political environment in Washington. Certainly, the Trump administration, even though being quite friendly towards China in terms of a geopolitical place, especially his personal relationship with President Xi, even aside of these things, still I think the overall strategy is moving towards a less reliance, less dependence on China. And same is true on the Chinese side as well. I think China is very clear that we're going to develop everything indigenously, resolving every choke point that is in supply chain. So I think this kind of a selective decoupling is happening on both sides, and I would continue. I would say I would continue to see that the exports from China to the United States is going to keep declining. Nevertheless, I think the overall impact on China's total exports is still manageable. We're probably going to maintain the same export level, maybe a little bit increase on a yearly basis. So I think it's okay, but I don't see it's a given.